Marketing Arthashastra Financial Wisdom series. We all want to invest in stocks and build wealth and live debt free. But before we invest, we need to understand how wealth builds up and accumulates. We have designed a course which covers the fundamentals of building wealth coupled with detailed approach to investing in stocks. We now start with chapter 1, understanding the background and approach to investing. Before we proceed, let us first understand where are we exactly placed in Maslow's hierarchy of needs. This will give us an insight into how we need to approach our wealth building strategy. Let us now look at how the Maslow's hierarchy of needs is built. The first part is basic needs. That is where your food, shelter and safety needs comes in. And the second part is where your family, relationship and friends come in. And that is where you start improving your lifestyle. You start making money, start saving money, etc. And the third part is self-actualization, where you improve yourself further and discover what you are good at, what is your niche, and basis which you want to build and scale up on your achievements. Building wealth is part of your psychological need, and that is where your investment journey starts. After doing your basic investments and saving, you will start building wealth, and we are going to see this in detail on how we are going to build it in the next scene. Let us first understand about you. Are you a fresher just out of college and started your career? Or you are someone tenured with up to 5 years of experience and start seeing money flow into your accounts? Or you could be someone with 5 plus years of experience and now under a high salary bracket and wondering what to do with your surplus. Or you could be someone with 10 plus years of experience looking to build wealth. Or you are just tired of people speaking about how they made money through stock markets, mutual funds, Bitcoin, real estate, when all you have is losses from these assets. Or you could be someone who is constantly worried about what could happen to your future with high EMIs paid for housing loan, car loan, credit card bills. Or living paycheck to paycheck. You could be any one of this profile. But we need you to understand something before you start your investment journey. As the first step to financial freedom, you need to steer clear of the following vices, characters, interaction from your life, and these are bad company, people who are not interested in life or live life as though there is no tomorrow, run too much debts, friends or strangers, colleagues who give you stock tips and tell you to invest because they have insider information and the stock would double or triple in a few days. Fake rich syndrome, where you try to act rich by buying a high cost brands or counterfeit products to show off. Throwing money and being reckless with your spends. Expensive bags, ties, blazers, etc. The worst and most important aspect, when some international banks observe your salary has increased, they would send their smartly dressed looking relationship managers and sell you ULIP plans or some junk funds which has high expense ratios, and TV show hosts with good looking models who convince you to buy stocks. These both are highly detrimental to your financial well being. And 6. Unethical financial consultants and zero cost demat account apps that give you low cost trading and entice you to trade and gamble rather than investing. Let us now look for the symptoms that you really need to watch out. The first symptom is you start spending too much on your credit card even when you can't afford it. like e-commerce shopping or buying that expensive mobile. And the second symptom is you buy that fancy, high speed, low mileage bikes when at half the cost it could have served the purpose. Reason 3, the most deplorable part, my life, my rules, where people just go and splurge on beers and alcohol and speak proudly about it, or splurge money on spas and salons and try to look or act rich when they are not. The reason for is visiting fancy restaurants and trying to take pictures and post it on Instagram or social feeds just to show there is so much happening in your life when it doesn't. And reason 5 and 6 is having girlfriends or boyfriends who gaslight you to make you spend more and they enjoy a good life at your expense, thus leading you to run huge bills. The next big reason is believing in astrology or soothsayers who tell you that by doing a particular gambling or by buying a particular stock, you will become rich. At the end, you will realize you would have spent more or paid more to these witchcraft practitioners than make your own money. Please steer clear of these kind of people. Apart from what we have seen earlier, these are the high risk activities that can almost make you bankrupt. Borrowing from someone to lend to a friend or borrowing money for obscene interest. Borrow to trade or invest without or partial knowledge of stock markets. And one of the most dangerous is Ponzi and multi-level marketing schemes, and basis peer pressure. If you buy a large car on EMI, that is sure to make you bankrupt. Okay, but what is one thing that has made us live in debt forever? Yes, that's a housing loan. We don't understand the basics of investment and think hard assets is going to make us rich. So, basis that decision, we start investing on real estate. But take a look at what is the real scenario in this scene, which is self explanatory, and continue. If you have experienced these symptoms, then it is obvious you would be under high stress, running paycheck to paycheck, and wondering what can help you resolve these issues. The solution to your problem is first understanding and calculating your net worth and what you really have in hand. For that, you need to answer a few set of questions which is self-explanatory in these scenes. But you don't have to worry about it. We have developed a simple Excel sheet which you can fill and understand what your current status is. The link is given in the video description, which you can register to get it emailed to your email ID. Please do download the file and calculate your net worth and understand your inflows and outflows. Next, we are going to see what are the different types of assets that you can invest. Now let us understand what are the various type of assets and how it performs. First, we are going to look at category of assets and the method of appreciation of how it increases the value of the asset, and liquidity, how soon you can get the money, and emergency, how fast you can get the money. We recommend you please spend some time understanding the various type of assets and do a Google search under each name. For example, fixed and safe income, stocks, etc. And then come to a conclusion of what is your understanding compared to what we have given. If you look at the appreciation in terms of stocks, you will see the principal appreciation. You get dividends, which is similar to an interest income. Stock rentals, that is stock lending, which you can lend your stock if you're holding it long. And then the bonus stocks that you will get, and the rights issue as well. As a result, stock market investments becomes our preferred way of investing. But it comes with its own risks as well, and it's a bit complicated to start with. That is where we are going to help. So friends, we have two exercises to complete. The first one is the net worth assessment. If you have registered, you will receive an email with the copy of the Excel sheet. And second, be cognizant of the brands around you. Why don't you list down the kind of brands you observe in your day-to-day life? I am just giving a small example here. Please continue and do your exercise diligently before you start investing in stock markets. We will meet on chapter